So while the panel are taking their seats, I'll just introduce the theme briefly. So this is about enabling the transition using sustainable bond instruments. So green, social, sustainability linked, whatever label we're using, transition. This is about harnessing the power of the capital markets to help deliver corporate and in some cases, sovereign strategies to transition the economy. So to get us started, I'd like to start with Nicole, who I guess represents what you might say is one of the sort of poster children of transition, having started out doing transition bonds, moving to sustainability linked, and then finally to green, a sort of a royal flush, if you will, of sustainability labeled instruments. So Nicole, I guess the question I had initially for you was, where next for Snam? Given you've done so much and use so many bond instruments to communicate your journey, what is the natural next step for a company like Snam? Thank you.
Thank you, Paul. Does it work? Yes, I think so. Thank you for the question. I think that the short answer to your question is I do see Snam going forward issuing both green bonds and sustainability-linked bonds, as we did back in February this year, and as we also stated in our sustainable finance framework. Why that? Because our framework, I think that embed the market evolution in sustainable finance that is now mainly divided between use of proceeds instruments, i.e. green bonds, and sustainability-linked bonds. So what we have done in Snam, it's basically to follow the market and to rationalize and standardize a bit the financial instruments that we do have in our portfolio, taking into account our strong commitment towards sustainability more in general as a value creation lever within our business, because we have decided to integrate sustainability in our business model, but also our strong commitment towards sustainable finance, given the fact that we clearly stated back in January this year during our Capital Market Day strategic presentation, our commitment to have 85% of sustainable finance overall, the total funding of Snam by 2027. And I have to say that we are well ahead in reaching the target. Green financing marks a further evolution in Snam's use of proceeds instruments, moving beyond the EU taxonomy-aligned transition format by focusing on low carbon gas infrastructure and adding also new projects such as green buildings and capture storage, for example, carbon capture storage, fully aligned with the EU taxonomy criteria, as also certified by the SPO provider that certified our framework. And this is when it comes to green financing. For SLBs, as you know, is all about reliability and materiality of KPIs. And we introduced new targets in terms of Scope 1 and Scope 2 emission. And we have also introduced a new KPI related to Scope 3 emission, together with a strong commitment and a KPI on gender equality when it comes to our framework. For the Scope 1 and Scope 2 emission, we do have a strong commitment in reduction of both methane and carbon dioxide emission through basically the substitution of turbogas compressors with electric compressors. We decided to focus and to put within our framework a specific KPI on the methane reduction. Why that? Because methane emissions represent around 35% of the total Scope 1 and Scope 2 emissions. So back to what we were saying, materiality of KPI, we deemed useful to focus on that specific KPI because of the materiality. When it comes to Scope 3, why we have decided to insert the Scope 3 KPI for mainly two reasons. First of all, investors are asking that more and more. And second, once again, back to materiality, Scope 3 represent around 50% of our total emission, Scope 1, 2, and 3. And so it's important to have this KPI in our framework, also underlying the alignment of the well below 2 degrees scenario that have been certified through the net zero assessment released by Moody's. Why that? Because I've been, when it comes to the decarbonization path, of course, SBTI is very well known on the market and requested by investors. But when it comes to us, SBTI did not release yet the specific methodology on oil and gas sectors. And therefore, we decided to add the certification of Moody's that I have to say it's very well welcomed. It's been very well welcomed by investors, and it certified not just the target, but also the process that you follow to reach the target. And just maybe long story short, when it comes to KPIs, and once again back to the materiality and reliability of KPI, our KPIs have been judged best practices by SPO provider, noting a full environmental materiality if the KPIs will be used together. And when it comes to targets, they have been judged robust or good, noting the lack of validation by SBTI due to the lack of methodology, and that's why we have decided to, let's say, use the Moody's methodology that has been very well welcomed by investors, I would say. So to, once again, cut long story short, I really do see Snam going forward issuing green bonds and sustainability-linked bonds. So, of course, we are a midstream operator, midstream infrastructure operator, and when it comes to green bonds, our CapEx, we do have around 40% of CapEx that are already aligned to the taxonomy. We cannot issue just green bonds. We need sustainability-linked bond to finance the transition, and we do think that sustainability-linked bond can really help in financing the transition. So we support the development of this kind of instrument.
Great, great. Thank you very much, Nicole. I could see Rahul visibly relaxed there when you concluded favorably on the usefulness of the Moody's product. So that's a good one to get out of the way. Mr. Kobayashi-san, if we could turn to you, and thank you very much for joining us. All the way from Japan, but I understand you've been in Europe for a while, so hopefully you're not too jet-lagged or have had a little time to recover, so welcome, and thank you again. So Japan obviously has been almost the sort of the center of gravity of transition in the market to date, and Japan has taken a sort of a global leadership role in the transition bond space. So can you talk a little bit about the measures that the Japanese government have taken to try to kickstart the transition market? Maybe you could talk a little bit about that. That would be really interesting. Thank you.
Well, first of all, thank you very much for saying that, and I really appreciate the warmness of this meeting towards the Japan's effort to do the lots of work on the transition. One of the reasons why we stick to the transition label for the 20 trillion yen green transformation or GX bond instead of green bond was to increase the awareness of the people towards the transition finance. And I think it is working. And another reason why we stick to the label is to obtain the evaluation from the third party towards the framework of the climate transition bond. And well, JCR and DNV provided very positive opinions. And we also received the CBI certification for our first issuance of the climate transition bond. And therefore, Japanese companies who want to develop their own transition plan for their transition bond can actually refer to these frameworks, and also the base document of the framework, which is the Japan's GX promotion strategy, to make their plan more plausible. And The government also trying to provide some tools for the companies to develop their own transition plans. For example, the government has been issuing and developing the commercialization roadmaps for the technology like hydrogen, ammonia, and also the CCS, with the clear timelines and also the cost target. And the good amount of the proceeds of the climate transition bond actually goes to the R&D projects for these technologies. And the government has also developed the roadmaps for the key sectors, such as the steel and also chemicals for the kind of transition technologies. What kind of technologies will be available around what time? And we developed these roadmaps in coordination with the both industry experts and also the climate change experts to make sure that they are actually plausible. And the government also issued the follow-up guidance because we think the communication between the investors and the issuers of the transition bond is very, very important. And also, we are now working with the major Japanese companies who are the part of the so-called GX League. The companies, a group of the companies who are actually working with the Japanese government to develop the carbon pricing mechanism in Japan to produce the guidebook for producing the transition plans. And the overall, I think the Japanese companies are quite aware of such government efforts, and they are increasingly interested in issuing the transition bond, I think. And the total amount of the issuance of the transition bond by the Japanese companies is now 1.6 trillion yen, which is still small, but I think we have a good future.
Absolutely, great. Thank you very much for that. I think it's clear that the government taking steps to set out some guidance really gives some confidence to industry to be able to, feel, that they can use the label and it's going to be something that they can refer to government guidance. It gives them that sort of foothold in the market, if you will. So I think that's quite interesting. Sam, investors, what do they want? That's basically going to be the thrust of my questioning, but. We spend a fair amount of time, trying to keep in touch with the buy side, trying to track sort of evolving perspectives and preferences. But maybe you can sort of lay it out for us in terms of, your views on how best to use a debt instrument to communicate a corporate strategy. What sort of formats do you find are the most appropriate to communicate a transition story? Do you have preferences around the label, or are you looking more fundamentally at the issuer profile itself and the sort of plan going forward? Maybe you could talk a little bit about what you want while I scribble notes desperately. Thank you.
Thank you. Maybe I'll start with an element of context, which is quite important, is that we systematically evaluate the ESG credentials of the bond and the issuer, irrespective of the label. So for all ESG labeled instruments, being green, transition, sustainability-linked bonds, we will analyze the transition merits or characteristics of the project being financed, if that's use of proceeds, or the targets that are being set in relation to the SLBs for the ones that are incorporated. But importantly, we think the transition profile and strategy of the issuer, including the targets, are always important and key. So the first criterion as part of our ESG labeled bond scoring methodology is actually about the strategic alignment between the sustainability objective of the bond and the broader strategy of the issuer. Then the second important point is that we also believe that it's key to remain consistent with the ICMA core instruments, meaning that transition is a label or tag that helps as it relates to the green bonds, potentially sustainability bonds or sustainability-linked bonds, but more as a subset or clarification regarding the thematic classification of the activities or the targets. We also appreciate that the use of proceeds and SLB structures can be complementary as it relates to the transition signaling of the issuers or their messaging on the transition. Even if they can be they can fit together, and it also depends on the issuer's context, in that, for example, there are issuers in certain businesses, sectors, jurisdictions that may have a higher share of their expenses that will be aligned with emerging taxonomy definitions of transition, and therefore it will be more straightforward for them to highlight these components versus others that may not have enough eligible expenses and for which the SLB format would be clearly the most suitable from the outset. But this said, even if both are complementary, if we take a step back and we focus on the fundamental features of SLBs versus use of proceeds and what transition means. So transition is about typically shifting from a high carbon business model towards a lower carbon business model, which necessarily involves a forward-looking approach, necessarily also entails a holistic perspective, so focusing on the issuer, the firm-wide positioning and ambition, as opposed to a narrow approach on only a portion of their activities or projects. Put differently, we think that the SLB format is particularly interesting for issuers that are exposed to these industries, have a transition angle associated with a sustainability strategy due to this holistic nature and forward-looking perspective. But importantly, and I think that was alluded to earlier today in relation to the EU Green Bond Standard reporting, or more broadly, that they are not necessarily exclusive, meaning there is also scope for issuers to define a framework that encompasses both the SLB and use of proceeds and can be adapted as deemed appropriate depending on the market conditions and so on.
Thank you so much. Thank you. Rahul, you're off to a good start already following that endorsement from Nicole, but I wanted to delve into your thoughts a little bit on how an issuer can sort of support their transition story, right? It's easy enough to kind of make these commitments, Paris aligned, et cetera, disclose it in your report, but what sort of footholds and supports can issuers, corporates and sovereigns draw on to help them sort of present their credentials, if you will, when it comes to the transition element?
Yeah, thank you very much, Paul. And congrats again to ICMA on 10 years not out. And I think the most comfy seats on the panel circuit as well. These are lovely. Look, we've heard from Samuel about the sort of information that investors are asking for. And it's getting increasingly sophisticated and increasingly layered in terms of the insight and the intelligence that you need to really make an informed decision. If I think about where we are in the market in terms of information analytics available, well, firstly, we heard from Emmanuel Faber earlier and TPT and the announcement of that being incorporated into ISSB, all very positive. But frankly, high quality targets that can be easily compared apples to apples is still pretty challenging today, right? If I look at some work that we've done in the analytics part of Moody's, over 1,000 US listed companies, we find that 9% of those companies have a below 2 degree target today, but 36% have no target and 34% have some form of information, but we can't really figure out what to do with it. And then you layer on top of that challenges around, are you selecting the right indicator? How are you accounting for things like market-based versus location-based emissions? It's still pretty challenging. So that's point number one. But even if we had the most perfect set of targets and data out there, what investors really care about is the soundness of the implementation plan. Not just what you're forecasting in 20 years, but do you have a credible, well thought out plan to get there? How are you thinking about implementing strategies for different scope-specific issues that you have? Are your CapEx plans adequate? How are you thinking about R&D, innovation, pilots, particularly around unscaled technologies? We can't just greenwish away the issue come 2030, 2035. So these issues are really important and require a detailed, engaged view of implementation. And that's one of the reasons why we launched the net zero assessment that my colleague kindly talked about a bit earlier. We really need to get under the hood, underneath targets, and understand, what is the plan? Does it make sustainable sense, but does it also make economic sense for an organization? And taking the case of Snam, for which we assigned our inaugural NZA, for which we assigned a significant outcome. On the targets, we saw a well below 2 degree target, very much aligned with the Paris Agreement, a really well thought out, credible strategy, particularly around short-term emissions, and the solutions in place, things like methane leakage controls, dual fuel compressors, renewable energy, all very supportive of decarbonizing Scope 1 and Scope 2. Now, on Scope 3, some of the challenges that Snam faces are really outside of its direct control and influence when we think about the long-term trajectory for natural gas and how that shifts over time, and essentially the goods or that are being shipped through the system. That's where a lot of that's going to be based on regulatory dynamics and market dynamics. And so it's really important, we think, for investors to not just look at the targets, but understand, what is the plan, what's in the control of the issuer, and how can then I support them on that journey?
Thank you very much, Rahul. I should say that you will have the ability to ask questions at any point during the session. And I have an iPad here, which I'm almost sure will work perfectly. So do feel free to put in your questions as they come to mind, and we'll try to deal with them towards the end. But I think we can also take questions directly from the audience. So moving on a little bit to talk about industry reality, I guess we could call it, and this is something that I see a lot. It's quite easy in some respects to define guidance and lay down kind of methodologies and things, but I think the real economy and where a lot of the industrial players that are involved in the transition they have extended time horizons, and it takes time for the industry to sort of react, and the sort of planning horizons and procurement and the contracts and all the rest of it. I think it's really interesting to kind of factor that into this debate, because this is the real economy, this is the energy system, and this is what we're dealing with. So I think the position of the gas transportation industry is really fascinating, because in theory, you're agnostic as to what molecules you move through the pipes, as long as there's an economic rationale for doing that and somebody's willing to pay. You're not connected as directly to the oil and gas complex as certain other providers of services are. And so in that context, given that in a way, in theory, overnight, you could switch from being part of the oil and gas complex to being part of something else. How do you see that coming about? What sort of incentives or government levers need to be pulled before we're having, a real market for low carbon molecules? Clearly, you've been working to build up the infrastructure and prepare it. But what really needs to happen in terms of next steps to get this low carbon gases, low carbon molecules, low carbon energy molecules kind of market going? Maybe you could share your thoughts on that. Thanks.
So as you were saying, of course, we are a midstream operator, so we are not engaged in the production of any kind of molecules. And I have to say that our gas infrastructures and the energy transition business are synergetic and highly interconnected. Our goal is to become a pan-European multi-molecules operator, managing a modular, flexible, and repurposable infrastructure to secure the energy supply across basically Italy and Europe. Of course, the shift from natural gas to other molecules will increase the volume that should be transported through our networks. We already anticipate the coexistence potentially of various molecules, green or decarbonized at their end use. And I have to say that we are fully equipped to support this evolution at a affordable cost. As you were saying, it's all about also regulation, because we are a regulated company. Of course, rising volume, somehow it's a positive news, because it's an opportunity for our long-term investment. The scale and timing of those investments will depend on the overall and evolution of the regulation. because our, let's say, CapEx allocation strategy is, of course, consistent. The hurdle rate of all our investment align with a return that risk-adjusted return that should be at least equal to the return that we are able to achieve through our regulated activity. And therefore, probably, even here, long story short, we need full visibility on the overall regulation to really take a final investment decision on hydrogen and carbon capture storage that are the main two technology that we are working on now within our decarbonization unit and the energy transition business. When it comes to the hydrogen, what we are doing within our business plan, it's to put a premium with respect to the gas regulatory scheme. For the carbon storage, it's probably, as of now, a much mature technology, and we've inserted it within our EMEA business plan at the same regulatory, basically more or less similar regulatory scheme to the one that has been applied to gas. So we are fully equipped to support this evolution. Clearly, we are a midstream operator. We are not involved and engaged in the production of hydrogen, and therefore we need also the support from the regulatory standpoint and financially, basically through grants or support financially more in general, also at the European level, probably when it comes not just the midstream, but also the production, because we need to have the production to fulfill the demand.
That makes total sense. So Snam is ready. Everybody else needs to do their part to get this alternative energy market going. Mr. Kobayashi-san, if we can turn back to you for a second and just shift gears to talk a little bit about the concept of just transition. We had some incoming questions earlier on before this session was planned about whether or not we're going to cover just transition. I mean, clearly, any move toward a different economic model, it may have impacts, negative impacts on the incumbent industries. How does the Japanese government think about that point? And is it something that the Japanese government is working on already, how to prepare for this transition?
Well, thank you very much for the question. And obviously, just transition is one of the very important principles of the GX Promotion Act and also GX Promotion Strategy. And about 1 trillion yen or $7 billion of the 20 trillion yen GX program is actually dedicated for the program like the reskilling of the employees and also the support for the SME transition. And also there are many government programs which are not really directly covered by that 20 trillion yen, but still can be used for the just transition purposes. And we have the government committee which is overseeing the GX program, so that we are trying to coordinate various government programs for the just transition purposes. And having said that, we haven't yet figured out what would be the scale of transition that we need to encounter to achieve the carbon neutrality. We want to make use of our current accumulation of the industries. That's actually the source of our strengths as the industrialized manufacturing-based country. And unless we are able to produce substantial outcomes for the commercialization of the technology like hydrogen or clean ammonia, and also CCS, we might have to end up with losing the substantial part of these very important industries. So that's the reason why we are making lots of efforts to create innovation in these technologies, and hopefully we can be successful. And also, I think it's important for us to have the growing economy to really make the transition smooth. If we do not have the growing economy or stagnant economy, the transition is going to be very, very tough. And it's very difficult to implement a just transition. Japanese economy actually went through the several transitions, not for the climate change, but for example, in 1980s, yen was appreciated against US dollar like 100% in 2 years. So we lost many industries, but we managed to do the transition because the Japanese economy at that time was growing. So I think it's very important for us to pursue the economic growth and the decarbonization efforts simultaneously.
Excellent news. Good to hear. And we have some questions coming in, so thank you for those. Do keep them coming, and we'll get to them in just a little bit. I wanted to leave the audience with some practical takeaways, and so I had a question for Sam. Top 3 things for issuers to try to get right when issuing a sustainable bond. Sam, based on your experience of looking at many of these things in the market over the last years, what would you say are the most important things from your perspective that issuers of labeled debt instruments should try to get right? Thank you. Pens at the ready. This is all you need. Only three things.
Sounds good. So I'll probably start by re-emphasizing the importance of the strategy. So the targets, firm-wide, and not only the themes that are directly related to the bond, but I think more broadly, having a clear sustainability strategy, targets dashboard, progress and plans matters. It's emphasized in relation to climate transition, but it's actually needed for any material strategic sustainability KPIs. The merit of the sustainability-linked bond concept is putting a spotlight on what good targets look like in terms of robustness, links to external benchmarks and so on. But arguably, this is something that is useful for green bonds and should be encouraged more broadly, as also stressed in the context of the climate transition handbook that ICMA developed. So that's the number one. And number two, in terms of timing, pre-issuance is also key for investors who have all the, on a best effort basis, obviously, the key information associated with the impact target and the implementation for SLBs. So, for instance, best practice would include pre-issuance tentative allocation. As it relates to SLBs, also, I mean, all the elements we have discussed regarding external factors versus internal factors that could affect the probability of meeting an SLB are useful because they support our assessment. And we appreciate in the context of a pre-issuance disclosure as well when it's balanced, meaning that the uncertainties regarding technology readiness for the transition is useful as an input. And similarly, all the potential externalities as alluded to earlier today with the green enabling discussion. And then the third component is related to leveraging the existing guidance from ICMA, but as it relates to the nitty-gritty details. There is typically a lot of focus on the core documents from ICMA, so the principles. But if you think about the Q&A, about the registry, I mean, all these other resources actually include a lot of details that are important for issuers to consider. And if they are not incorporated, explaining why is equally useful because there can be a strong reason why they do not necessarily fit, similarly to the taxonomy discussion. And I'll probably, related to that, point out the importance of building on these core resources from ICMA to look beyond in relation to the external stakeholders, so being SPOs, NGOs, academics that can help provide an opinion or support the credibility of the allocation to transition projects as it relates to science-based scenarios or the credibility of the targets. And a quick example of this, we have been working on a new transition-related initiative related to methane abatement, which is very at the heart of the energy transition as it relates to oil and gas, emerging markets, some of the most difficult questions. And as part of this initiative, we are exploring with a range of other external stakeholders what good practices look like in terms of KPIs, in terms of eligibility criteria. And that's building obviously on ICMA, but going beyond it. And that includes, for instance, the Climate Bond Initiative amongst other stakeholders.
Great, thank you. And Rahul, I wanted to get a comment from you also on the just transition topic. Not necessarily something that's directly covered in second-party opinions, but how does Moody's institutionally think about that, particularly in terms of maybe the credit risk dynamics, you know, the impact on workforces, cost of layoffs and restructuring and all of that kind of stuff? Can you talk a little bit about how that feeds through into the Moody's worldview?
Sure, Paul. Of course, it's still very much an emerging theme. From the credit perspective, I think we're probably more focused on it for sovereigns. When we think about a government that's not managing a transition well, it's going to face potential unemployment issues, social unrest, tax revenue losses. And as Ulf mentioned earlier, I think that commitment to decarbonisation through a political and economic cycle is really important, and that speaks to the quality of institutions within a particular country. So we've done some analysis on this. We tend to find high carbon sovereign exporters with relatively weak social and governance indicators where we're seeing pockets of concern. Maybe that's the likes of Ecuador, Nigeria, Angola, where some of these risks are certainly being discussed within our committees. Bringing it back to the debt capital markets more generally, I think it's fair to say we haven't seen a lot of eligible projects or KPIs linked to the just transition today. I think, frankly, it's harder to find bankable projects from a UOP perspective. On sustainability link, we've seen a few KPIs around sort of more generic DE&I and CSR training, but can vary in quality. But there are some precedent transactions. We were privileged to work with Renault last year, and in their green bond framework, sustainable bond framework, apart from financing, EV facilities and on-site renewables and what you would expect from a car maker, they had a fair transition category looking to reskill workers around EV technology, around circular economy, around digital transformation. Clearly a highly relevant category for that sector and that issuer, and potentially high impact for their workforce. And when you think that Moody's, we see about 16 sectors, $4.9 trillion of Moody's rated debt with elevated exposure to carbon transition, there's going to have to be a lot of reskilling, upskilling, retooling, rehiring. And that means I do expect to see more going forward, but it has to be relevant, it has to be material to the business.
Understood, thank you. We're sort of coming up to time, so I wanted to take some of the questions from the audience. So the question here about Australia, which many of you might have seen, recently issued a green bond, and the question is, given Australia's transition challenges, I guess you could call them, there's a lot of sort of domestic industries, mining and steel and the sort of heavier end of industry. Does the panel think Australia missed an opportunity by not issuing a transition bond? Interesting question. While you guys frantically formulate your thoughts, I'll just respond on that one. I mean, I think we would always say, if you can do green, you should do green, because certainly from a kind of an investor perspective, that tends to be one that is the easiest to process. Transition, may have additional explaining required to accompany it, but do you think Australia would be a more natural transition bond issuer versus a green bond issuer? Discuss. Anyone can feel free to go ahead, Mr. Kobayashi.
That's a very good question, and obviously from the viewpoint of the Japanese government, they should issue their transition bond. If they issue their transition bond, we are able to share our experience, and they are able to take advantage of our accumulated work. But of course, from the viewpoint of the work of the government, we can actually stick to the green bond framework. The Japan's GX transition bond, climate transition bond, can be also classified as the green bond. But we stick to the idea of transition label because we thought that the idea of transition is very, very important for the industries. And that's the case of Australia as well. They have lots of industries, or especially mining, which need to think about the transition. And I think from that viewpoint, they should have been aiming for the transition bond.
Maybe just briefly on that. I wouldn't get too obsessed with the label. There's different horses for different courses. We've heard about the transition label success in Japan. Ulf talked to us about SLBs for sovereigns. We've heard from Isabel about green use of proceeds. I think what's key here is there, as we've discussed earlier, a credible link between what you're trying to do as a government and what you're trying to finance. That coherence, as we call it in Moody's, is particularly important. And there's a lot of information, there's a lot of standards out there from ICMA, from CBI, from others, to help you articulate that story. So I think if you have a credible story with short, mid, long-term targets and a credible plan to get there, I personally think the labels is a secondary discussion.
Maybe.
Yep, go ahead,
if
Nicole.
I can add something, and maybe I'll borrow the last slide that has been presented by Alf before, in which you saw that the transition bond basically uses proceeds, but when it comes to transition, you can, let's say, reach the transition and they overlap with sustainability-linked bonds. So to me, the question is why not to maybe switch on sustainability-linked bond, given also the importance of the strategy and all the KPIs that need to be met also from the government standpoint, because at the end and I do agree with what has been said from my colleagues, it's basically all about the strategy and reliability of the strategy that you are following.
Great. Thank you very much. We maybe just have time for one more, unless there's anyone else in the audience who would like to ask a question. If not, I'll just ask one more, which is to Sam. ESG label bonds, how do they fit into the PIMCO portfolios specifically focused on decarbonization and the climate transition?
Important topic that was brought up earlier today in relation to the impact reporting working group. So if we think about the role of ESG label bonds as part of decarbonization, net zero alignment of portfolios, we incorporate them as part of our framework as one of the tools or instruments. So it can be linked to climate solutions as a lever or target in itself for alignment, for use of proceeds and green bonds in particular, including green bonds with a transition component. Then for the climate leaders categories, the sustainability-linked bond concept is obviously particularly suitable to shed light on issues that help a portfolio decarbonize over time. Certain decarbonization frameworks incorporate the share of issues that are aligned with the Paris Agreement on climate change based on sustainability-linked bonds or science-based targets. So that's one way of doing it. I think the most important challenge I would like to stress today, which was mentioned before, is the fact that if we look at the broader ecosystem in terms of regulations, voluntary initiatives on decarbonization and net zero alignment, the role of ESG label bonds is not always recognized. And there can be synergies and trade-offs between the KPIs or objectives of these frameworks and what these green bonds or SLBs focus on. The case in point is decarbonization. If you exclusively focus on portfolios, finance emissions reduction, there can be trade-offs with investments into green bonds from utilities, unless you have a specific accounting approach for green bonds, and likewise for SLBs. So the opportunity probably for the market in terms of standardization, next steps, and guidance is to specifically define the role of ESG label bonds and what are the robust incentives for real economy decarbonization in relation to these frameworks and ESG bonds.
Thank you so much. The last word goes to the investor, as is right and proper. So thank you all for your thoughts, and thanks to the audience for your attention. If we could just please thank the panel in the usual way, we can leave it there. Thank you so much.